All right, good morning. This is a great Saturday morning. It's Farhan from Blue Sky International. And today we are discussing the topic about why we love inflation when we invest in US real estate. This is part of our weekly investing strategies series where we bring to you discussions and topics that will be of interest to people who want to invest in real estate or investment in general. Okay, and as with previous episodes, there's a lot of information that's being shared that is, that's been very revealing. That's, people don't really see it happening in their own local markets. So today, I'm very happy to have with me Ms. Veronique Fishu, right? She's from Noble Sky International as well, to share with us a little bit about what the topic of discussion is today. Veronique, can we have you on, please? All right.
Yes, good morning.
Hi, Veronique. Okay, great to have you. Today's topic, to me, it's really important because inflation, right? It's the sort of like the buzzword for a lot of the news headlines, if you have to look at it, and it's affecting so many countries, so many places. What are your thoughts about this? Maybe you let us know a little bit about what you do in Noble Sky, and then after that, going into the topic, please.
All right, thank you, Farhan. So I am the Senior Head of Performance and Development and the Lead Trainer for Noble Sky. And in a former life, I actually was a fund manager. So my specialty was Asia Pacific growth stocks, ex-Japan. And inflation was always a topic that we were discussing, of course, for these kind of things. So yeah, and seeing, inflation changing and coming back the way, and coming back and becoming again a topic of conversation is not something that we have really seen for the past, at least 20 years, actually.
Wow, that's a long time.
Yeah.
Okay. So you are the right person for us to speak to when it comes to inflation and the effects on the market and the investment environment. How it affects people's maybe decision making, and most importantly for me, it's what options do I have since this is inflation is going on right now, especially it's on the increase and uptrend. Right. Let us know.
Well, so the first thing that people need to sometimes, especially, I'm going to sound old now, but especially younger generation, is we don't really know what inflation means. And to simplify it completely, it's everything you buy is more expensive.
Right. Okay.
So you go to the supermarket, and what used to cost you $100 now costs $110. You bought the same thing, but it's more money. When you go and put petrol in your car, suddenly it's more as well. So that's basically inflation, is the value of your $1 or your $10 buys you less.
Okay, I get that. Very clear explanation. You're saying, Veronique, sorry.
And this is one of the reasons why, in my mind, buying real estate actually makes a lot of sense.
Okay, right. I hear this and I get worried myself. Really, I don't think you are discussing this topic makes you any older. but I think it is a cause for worry. I think not just with any generation. I think it applies across the board, right? Especially for people who even applies to people who maybe just fresh graduates getting into the working workforce. Then now that they have their income, they have to start planning, right? About what they want to purchase in their whatever stages of life they're in, and that value of money, I think it applies across the board because suddenly things become a lot more expensive. So what I'm hearing from at least where I am in Singapore, not just inflation is going up, yes, and that's being driven by a lot of factors externally and internally as well. And also because of, this, at least according to the government, they want to be able to move on with the times in a sense. They need to increase the GSTs, the goods and services taxes.
Yeah.
And there's a few other taxes as well that's being discussed in the recent budget. And to some extent, that appears to be an increase in cost for people who are buying, the daily necessities, right? So it becomes an issue for people across the board. And I think it's a really important issue that we are discussing here. But since we are, of course, an investing education company and we focus on the US real estate, let us know if it is still a good option because of inflation, is buying real estate still a good option, and how so?
Okay, so in general, if you think about it, if you when you have inflation, the price of real estate usually increases as well. It's not directly correlated and linked, but if you own real estate right now, right, and it's an investment, most likely within the next couple of years, with inflation, your $10 that you have in cash will be worth less and will buy you less, but your real estate will be worth more. That's me really simplifying it, basically. So actually having something that is tangible like real estate is actually called a hedge to inflation.
I see. Okay.
So it's a protection.
All right. Yeah, because if I'm looking at that, we're talking about real estate prices actually going up, although it's not directly related, but in a sense, end of the day, I think that the price of real estate will go up. I'm thinking as well, how does that affect the stock markets in terms of people's options? Do people tend to move away from stock markets in inflationary environment?
Well, the thing that goes with the inflationary environment in general is that interest rates tend to go up, right? So one of the ways that governments try to control inflation is by raising interest rates so that you cannot borrow money as easily, so you cannot spend as easily. And in their mind, it will control the price because there's not as much demand.
Right. So basically, people have lesser access to money because it's more expensive to borrow.
Yeah.
And because of that, they are probably buying or trading lesser in the market, in the stock markets. So that will sort of like drive down prices. Is that the general idea?
It's the general idea. I'm not an economist, okay? So don't take everything at face value. But generally, that's the idea, that they're going to raise interest rate so that people spend less and so that the inflation does not run out of control.
All right. And I think, in fact, that's exactly what the Federal Reserve in the US is actually doing.
Yes.
We have heard quite a bit of news about them increasing interest rates across the board, and that's also causing some changes in terms of people's buying options, investing options. So let's talk about the kind of properties that people can buy in US real estate that will make sense for them. So if we've heard about real estate in general, it would be a good asset for people to actually buy into if they want to hedge against inflation. So at least in your experience, right, doing US real estate, do people still have options these days in today's context with the inflationary environment to still buy profitably in the US?
Yes, I really think they do. One of the things that is noticeable with interest rates going up as well, and we noticed that recently, that was very noticeable because basically the interest rate on the mortgage in the US have gone from about 3% to roughly 4% at the moment. So that's quite a higher cost for the normal investor. But what we see at the moment is that there's a lot more demand than supply. So prices of real estate are going up and up and up and up. So if you're already an investor, you already have your house and you don't have a huge mortgage on it, or if you have even better, a mortgage with a fixed rate on it, which was much lower, then you're golden and you're in a really good situation. And providing you actually use this as an investment property and you rent it out, in general, you are able to adjust the rent according to inflation. Not all the time, of course. It could be the average rental is a year in the US, right? The average rental contract, but every contract you are able to adjust.
Okay, that sounds good. So yeah,
unless you're in rent control areas, but then these are not the ones we invest in.
Right. Okay, so actually that's the second part, which is advantages, right, for the investor. Not only the value of your property goes up, you can also revise the rental rates with the inflation as well. Okay, that makes a lot of sense for me as an investor because I'm worried about my value of my money. So technically, if I want to be able to maintain my buying habits, for example, I need to have more income. If I'm unable to adjust my rental income, for example, with the inflationary environment, then I'm losing out, right, in that sense.
Yes.
So I think that positions me well if I were to be a landlord in a property in the US, for example, for me to start, maybe revising it once the contract ends, and then at least I'm trying to hedge also in terms of the inflation. I've got one other question for you, Veronica.
Yes.
How then do people buy, let's say for us investors outside of the US, how should we buy properties in the US? Should we just look at the listings, say on Zillow, and then buy it off the market? What is your thought on that?
Well, this is one of the things that we keep telling people. And remember, you make money when you buy, not when you sell. So yes, you could find a great house on Zillow, but first, Zillow is probably one of the most expensive sources to find a place.
Really? Okay.
And so, yeah, it's a good way to do your research. That's it. I'm a big fan of Zillow, but I probably would not buy off Zillow directly. There are many, many options in the US in particular to buy at discounts.
Okay, nice.
Right.
Please share.
Some of those properties may be distressed, so they might need a little bit of extra TLC, as you say, love and care, which means, you might have to plan for rehab, for instance, or just repaint the place before you rent it out. That happens a lot. But basically, we source our properties for Noble Sky mostly through wholesalers, right? So there are intermediaries that are not necessarily interested or that are not necessarily trading in the beautiful homes, right? They're trading in things that if we fix it up, we can get a much better price.
Okay, makes sense.
So, and they make their money out of really being the intermediary. So it's actually quite an easy way. And there's always supply there. And we have a list of wholesalers that we work with as well. And one of the other options that we used a lot in the past has been tax auction, which basically means when people do not pay their taxes for property taxes for a certain amount of time, the local government can take the property and sell it out to recoup this money. At the moment, it's restarting post big pandemic pause, and there was rules about evictions and everything, which are now finished in general. But the supplies that we have seen coming through tax auction has been of very, very low quality. So we've kind of held back a little bit on bidding on property, though I'm excited about the next auction in Duval next month, because that's going to be our first foray into auctions for a while, and I'm looking forward to seeing if there's good supply there.
Okay, great. So when you mentioned auctions, and I believe you mentioned Duval County, we are referring to tax foreclosures, right? Yeah. So where the local government basically foreclose on the property because the owners are unable to pay their property taxes. Give us a little bit of an insight. What kind of price points are we looking at in terms of buying these properties?
Well, it depends how many people are looking at buying it too, right?
Right.
So what I found from looking at the property and the auctions, one of the best deals, and I'll put that in brackets, are actually estates. So when the owner passed away, of course, there is suddenly nobody to pay the property tax. And the government still wants the property tax because, of course, they depend on the property tax to pay all the local services. So these houses are usually in better condition than the ones that have been abandoned by the owner for any reason. What we've observed is, as I say, depending on how much competition you have for the property, that we've been able in the past to acquire properties from anywhere from $7,000 and all the way to $65,000 or $80,000. But of course, what we have to look at is what the after repair value of the property would be and what the comparables in the markets are. Right. So this is where it is really, really important to do your research really well. Look at the numbers, check out the area, send somebody to check out the area, make sure it's a good area to invest in. We don't want to put our clients' money into areas, for instance, that have really, really high crimes because there's less demand. So all this has to be done through research. And in general, what we are looking for when we buy, especially to fix and sell, is a return of a minimum of 30%. So we really need to be careful with the numbers, and that includes for us, and that's been something we need to look at with inflation. That includes making sure that our rehab costs don't explode. So don't suddenly become so much higher. And in the case of rental or Airbnbs, we're looking for return of 10 and 15%. So that's already quite a high return compared to what you would get in the local market. But the same thing, we need to do our research, and we always buy lower than the market value, which in some cases can be a bit challenging at the moment because it is definitely a seller's market.
Okay, so I hear you, and I think this is very interesting because you mentioned 7,000 to maybe 80,000. Those sound, for real estate, sounds like very, very affordable numbers, in my opinion, relatively, right? Because I know that when I was, scheduled to do this topic, and I was looking at, okay, if real estate is a good hedge against inflation, and I want to get in now, and I'm looking at my local market in Singapore. I haven't got enough
I wouldn't do it
in the bank to actually be able to afford to buy one, because here if you're talking about $80,000 in Singapore, probably is just enough for a down payment on a second property, right? I can't, because I can't be renting out my current property, for example, where my whole family lives in, to say get rental income from there, because it doesn't make sense. We need to live in our own house with our own privacy. So the only real option for me as a Singaporean is to get a second property. So being a Singaporean, we are living in a very good place. Of course, there's so many good things about this, but what we are also famous for is a very expensive cost of living, very high cost of living, and that includes the real estate here. So if Singaporeans who are listening in right now, and probably also in places, I believe in even in people who stay in cities like Jakarta, or in the CBDs like in KL in Malaysia, for example, if those are the areas you want to look at, I think they are also going up, very expensive, competitive as well. I suppose that brings us down to the next question, would be, if we are looking at US real estate, how does someone who's a foreigner, since Singapore is so expensive to buy real estate, how do we actually get started looking at US real estate at all? Is it an easy process, or is it complicated or complex? How does that work?
I wouldn't call it complex, but it's not easy, if that makes sense. The basics of it is simple, but it is time consuming especially if you're here, and you actually have to have people that you really trust. Because unless you're planning on getting on a plane and going to the area and doing all the things yourself and wielding the hammer or the paintbrush, right, you're going to have people that you can trust, that can take care of the property, that can make sure the rent is collected. For instance, if we're talking a rental, send you the money, not hold on to it, right?
Yep.
So this is where these are the things. It's not difficult, but it's not easy either.
Right.
So it's this is why I think one of the things that we at Noble Sky do, and that is different from what you can get in other places. I think Noble Sky is the only company in Asia that offers this kind of service, where we do everything for you from A to Z.
Nice.
Except signing the papers.
Yeah, I wouldn't want you to sign my papers. Yeah. Yeah. Right.
So yeah, that's
okay.
the simplest way to put it.
Right. And I suppose, people who are watching and thinking about US real estate as an option, I think other people who, at least in Singapore's context, because that's where I am, I don't, when it becomes expensive in Singapore, people tend to look for options elsewhere. And, I think if we were to look at social media, you get to see a lot of advertisements for UK properties, Australian properties, and then there's US. Actually, frankly, I've not seen many offering US real estate, and which is why I'm very excited, because what we have to offer, I think, hands down, in terms of value, even in terms of the property prices in the US, is a lot more affordable, right? So for the same amount of money that you have right now, probably can buy you more real estate in the US than probably compared to the UK.
You definitely can. The other thing that I notice about these adverts for Australia and the UK is that it's always dependent on you getting a mortgage. Right. So that means that you put something down, and then they apply for a mortgage for you, and they manage everything in general. But I think the costs are much higher, and it could still return maybe the 8-10% per annum in general. But it's the commitment for you, as opposed to just investing cash, is a lot longer term and a bit scary sometimes.
Yeah, and I think when we talk about taking out a mortgage in a foreign country, there are also risks there in terms of your liabilities to the finance company or to the banks. And then say if you, for whatever reason that maybe you can't pay, then your property will be at risk of maybe foreclosure.
And trust as well. And trusting the company that organizes it. Unfortunately, that's happened a few times in the UK and in Australia, that suddenly that company was no longer available, but you still left holding the mortgage and holding the bag. So that can be, that could be, as you guys say in Singapore, that could be a lot of mafan. But, but one of the things that I think is different about how Noble Sky does it is that there is no mortgage involved. You can, if your investment amount is not that big, you can co-invest with other investors in the same situation. So, but you are not left holding a mortgage that has risks, that has potentially interest rates going up and everything. So that's the other thing that is really, really important. It's a very different type of gearing or leverage.
Yeah, when you mentioned about the interest rates, changing down the road, right? That is a pretty scary thought. Imagine if you have a few $100,000 worth of loans, and I imagine in some of these countries where the values of the properties may be in the millions, the risk is a lot higher there. And
for investment properties, often, like in the UK, the mortgages are not fixed.
Right.
So that becomes kind of tricky when you're talking about inflation and interest rates going up.
Yeah, that's right. Food for thought. Right.
Definitely.
Yeah. Well, it's been a very interesting conversation. I think it's pretty clear that across the board, if you were to look at some kind of options to invest, real estate is really one of those that in my opinion, makes a lot of sense because with inflation, it actually goes up in line. And for an investor, for sure, it's you can be assured that your value will go up together, right? And I like the fact that real estate at the end of the day is really the value and the price is determined by demand and supply, and not so much as volatile as the stock markets, for example, where things that's going on right now, US, Ukraine, and whatever that may be out there is going on. Value of properties don't just go up and down overnight. And I think that's important for an investor who's seriously thinking about protecting the value of their money and about growth for the long term. You can't, I think you can't plan if it keeps going up and down, and there's always so much uncertainties. And that's the other thing which I like about real estate. And yeah, I think we've sort of like covered the bases here about real estate and inflation, and especially when it comes to US real estate. It's a very, very interesting thing that we have going with Noble Sky International. And yeah, I would really invite those of you who are watching this video and you have questions about how we actually buy US real estate, you want the juicy details, the nitty-gritties, the strategies, how do we enter the market and position you in a way that's that protects your position. Yeah, you can go ahead and reach out to us. Veronique, any maybe final discussions that you have about the topic of US real estate in general?
Well, the thing that I want to say, of course, is that that's an old adage, right? Don't put all your eggs in the same basket. Mm-hmm. But I consider that real estate or US real estate should definitely be one of the assets that you have. And remembering that real estate, as opposed to stocks or bonds, is actually a solid thing, right? Yeah. It's the land. And so there's value to that. At least in the US, there is value to that.
Okay, nice. Thank you very much, Veronique, for joining us on Saturday morning.
Thank you.
Right, and I think we look forward to having future episodes together featuring yourself or around your eyes. Yeah, and I think what we really want to do for people, and I think this is becoming a lot more important now in 2022. When suddenly we are greeted, the new year is being greeted with so much uncertainties and volatilities in the markets. People need to know, and people deserve to know, in fact, what better options there are out there. Yeah. And and I'm glad that we're actually doing this. I think we're doing a favor for the investors out there who are really looking for better options. Right. Yeah. So thank you, Veronique, again for coming on. And to those of you who are watching, thank you for tuning in. Again, if you've got any questions, you can reach out to us through this Facebook page which you're looking at, or if you're watching this on, say, YouTube, you can always drop in a comment. We'll be in touch with you with details that you require. Maybe you can start looking at real estate in the US as something that you can do for yourself and your family.
Yeah, right? Absolutely. Or attend one of the webinars or even the workshop.
Yep, that would be nice. All right, so that's it for me. Is there anything else for you, Veronique?
No, thank you. Thank you very much for joining us this morning.
Right, same here. Take care, everyone. So we're going to end the session now. Take care and enjoy your weekends. All right. All right. Bye-bye. Okay, so that's
the recording.
Let's see. Stop recording. All right.
So you're going to have